Good afternoon, and welcome to the November 15th edition of Success by Association Live. This issue is sponsored by the Crowne Plaza Resort in Asheville, North Carolina, and the Great Wolf Lodge in Concord, North Carolina. We thank both organizations for being valued ANC members and for their steadfast support. Today's article was written by Lou Novick, President of Novick Group Incorporated, headquartered in Rockville, Maryland, and is reprinted with permission, copyright ASAE, August 2016. The article is titled, Event Cancellation Insurance, Protecting the Biggest Asset, Not on Your Balance Sheet. Conferences and events are often major revenue drivers for associations, meaning a significant disruption or cancellation could mean a painful financial impact. Event cancellation insurance can help an association mitigate such a risk. Here are the key factors to consider in deciding whether to get insurance for the unexpected. The two basic maxims of risk management. High severity loss threatens the financial viability of an association. Associations should insure against low frequency, high severity events. Meeting revenue. Whether a single anchor event or an entire calendar of income generating conferences, workshops, and seminars is, for many associations, the biggest revenue line item. Once established as being worthy of attendee, exhibitor, and sponsor support, a successful meeting can be relied upon year after year to generate income for the sponsoring association. Since event cancellation claims generally fall into the category of low frequency, high severity events, why is there so much confusion among some association executives about the need for and value of coverage? From that perspective, it's an asset in need of protection, right? In part, this confusion has to do with some misconceptions about the coverage. Event cancellation insurance equals property insurance. The notion of a successful meeting as being an item of property is not well understood by most people. But in risk management terms, that's exactly what it is. The meeting may not be tangible property in the sense that a building or a desk is, but there are many kinds of non-tangible property. For example, intellectual property rights such as copyrights, patents, or trademarks that represent significant sources of income to the property owner. It seems like everything is excluded. In fact, everything is covered unless it's specifically excluded. Of course, understanding the exclusions, where they are found, not always in the exclusion section, and what the text means, definitely not an intuitive read, is challenging even for experienced insurance professionals. However, the principal exclusions, for example, the ones that are typically the basis of a declination, are fairly straightforward. Financial failure. This includes an event which is generally unsupported by funding sources such as attendees, exhibitors, and sponsors. The underlying explanation may have to do with a lack of interest in sessions or other event programming, reduced exhibit hall attendance that dampens exhibitor interest, or a competing event. Loss of support. This is related to financial failure and includes everything from loss of committed financial support to the inability of government or military employees and contractors to participate following a government shutdown or loss of budget authority. Necessity. This applies to circumstances that are elective in some respect, such as not liking an ordinance or simple inconvenience. Another one is it costs too much. Check the math. If there is anything close to the historic lows in mortgage rates of the past several years, it has to be event cancellation insurance rates. Rates have not been this low since ASAE originally introduced the coverage to the association community in the early 1980s. Base rates. The cost for basic coverage, not including specific perils such as communicable disease, have fallen to as low as 0.0020, which is rate times gross revenue equals premium. Surcharges for perils such as communicable disease and enhanced terrorism will increase the premium expense, but these are still historically low rates. We have 4 force majeure clauses in our agreements. A carefully written force majeure clause will mitigate the risk of loss, a form of non-insurance risk management, if cancellation or curtailment of your event triggers the clause. But even the most favorable force majeure clause will not make your association whole in terms of net income. While release from the venue rental and food and beverage commitments may be successfully accomplished via a force majeure, if the association wants to retain budgeted net income and be in a position to refund attendee and exhibitor registration, insurance is necessary. We self-insure. Chances are you don't. There is an important difference between self-insuring and simply retaining the risk on your balance sheet. Self-insurance implies a formal decision by management to retain risk that is based on reliable projections of expected loss frequency and severity, and for which funds are both dedicated and restricted. Retained risk, what most associations mean when they say self-insure, however, is less formal and far more commonplace. Even if your association is fortunate enough to have the balance sheet strength to withstand the loss of annual meeting revenue, you need to question whether this falls with the intended scope of the reserve use. Placing reserves at risk because of a weekend of bad weather or an outbreak of Legionnaire's disease implies a degree of risk tolerance that few association boards would likely find acceptable. We've saved a lot of money by going without coverage. When it comes to insurance, not just for event cancellation, many people take the view that since they haven't had a claim, they have saved money. It's true that the dollars that might otherwise have been expended on premiums are still in the bank. But there is a serious weakness to this argument. Like any observation of a historical event, the statement is made with the benefit of certain knowledge. The reason insurance serves as an important purpose, both for businesses and individuals, is that it eliminates the element of uncertainty. It's the difference between cost of risk and cost of insurance. When you can't predict the peril that affects you, when it will affect you, whether it will ever affect you, and how significant the loss may be if it does, insurance mitigates the risk of uncertain loss by flattening out expense in the form of a premium. To buy or not to buy. Whether an association includes event cancellation insurance in its insurance portfolio depends on a number of factors. To help organize your thinking along some objective guidelines, here are some of the most important decision criteria. 1. Does your meeting generate a significant fraction of your association's gross or net revenue? 2. Does your association have the financial strength to absorb the loss of net revenue from a canceled meeting? 3. Is the success of the meeting sensitive to external factors such as weather, earthquake, communicable disease, political unrest, or some other type of event? 4. Are there significant financial commitments, for example, room block, food or beverage, or speaker fees? Non-refundable deposits or prepaid expenses that impact the financial outcome of the meeting if it is canceled or curtailed. And lastly, what is the risk tolerance of your organization? That concludes the article. We hope you have a great day.